Hello YouTube, and we're back with another backtesting video. This time I'm actually on GBP Aussie dollar. I did a backtest for 4 days, which was the 17th to the 20th of July 2023. And so I just want to go over some of the trades that I made for that week. 2 of the days I was in profit. Well, I ended with profit. 2 of the days I ended with a loss. And so let's go over those trades. Let's start with Monday, which was a 39 pip profit day with a 17 pip loss. The first trade, there was a demand zone from the previous day, which was that Sunday. And so price came into that area. I am learning to make my stop losses a little bit smaller because this stop loss was 15 pips. I definitely could have brought it up to there, but you know, you live and you learn. But price came into this demand zone, rejected off of it. We took it up that high. I think I only took it up to right there because I saw that imbalance. So I could have taken it up to that high, but I wasn't too sure. I'm learning or as well, to trust my trades, you know, and go for the highest percentage that I think I can go for. The second one was based off of the result of that move to the upside, that previous move to the bullish side. Price came into that area and actually rejected all the way up there, but I still got in when I think I was looking for, or waiting rather, for a bearish candle to close this way, and so that's why I got into this trade here. I made those lows, these lows right here, these previous lows, I made that my TP. And this one was a 21 pip move with a 9 pip stop loss, and so something like that. I made my stop loss a bit wider, considering the trade. The third trade was a loss. I made it based off of this move to the downside right here, which was actually back into this demand zone that we previously drew from Sunday. But I don't think I waited. Price made all the confirmations, all my confluences to get into this trade, but it still went the other way. That was an 8 pip move. Again, could have made my loss smaller, could have made it 7 pips. I mean, 1 pip. What's really the difference? But I should have known from the way that price was making those wicks to the downside. And then my fourth trade of that day would have been around 3 p.m., which is rare because I'm still trying to figure out how GBP Aussie dollar moves. And I'm trying to figure out, like, you know, what time to trade, what time not to trade. And this one was because of a demand zone that I saw right here. I felt like that was a demand zone that was being made. Price would have broken this minor structure right here, and so I took price right here when I saw that bullish candle right there was closing, and it actually missed my target by, let's see, 1 pip. It missed my target by 1 pip. This is a support or resistance line I saw from in the past, in the past, and so that's why I made that my target. On MT4 it probably would have taken me out of the trade though, but 1 pip. So I actually made that was actually a loss for 9 pips. Again, could have made my stop loss smaller, 3 pips. we live and we learn. So those are my trades for Monday. The next trading day, which was Tuesday, I took five trades. The first one was off of a demand zone that I saw being made right here. Actually, a supply zone, yeah. But price went in the opposite direction. If I had made my TP the bottom of those candles right there, I probably would have been able to get it. But again, I made this support and resistance line my go-to for my TP, and it actually stopped me out with 7 pips. You would have seen the rejection of that zone right here on this candle. And so again, I just would have been waiting for a selling candle to close. But it basically would have, again, if I had a different TP. The second trade was in a demand zone. This demand being made right here off of this move. Price came back into this area a few times and rejected that area. And I waited for this bullish candle to close, and so that's where I got in. I made 16 pips off of this one, and I had a 12 pip stop loss, but we profited off of this one. This one was the third trade, and it was based off of a supply zone that was being made here. Price would have broken these highs, and so we had a rejection of this zone, of the supply zone. I got in on the next strong selling candle, and this one was 24 pips with a 7 pip stop loss. I think this is where I started to make my stop losses smaller by putting them right under the rejection candle, or as close as possible to the end of the rejection wick. The fourth trade of Tuesday was a demand zone trade. I think I had learned from those two first trades, not to put my TP at the support and resistance line, and so it's what I did here. I didn't put my stop loss up under that rejection candle. I don't know why, but if I did, it would have been a 7 pip stop loss, which would have been like a 1 to 3 trade, but it was a 1 to 2. We made 23 pips off of that trade, and yeah, so that was based off of this demand zone right here, which was back on Sunday. Actually, like that opening, not opening, but it was like a 6 o'clock candle on Sunday. So it's good to go back as well and see if there are any areas that could have been missed previously. And then the final candle on Tuesday, or the final trade rather on Tuesday, was made in a demand zone from this move to the upside right here. Price came back and retested this demand zone, and so I got in on this bearish candle. I think I was just trying to make it a 1-to-1 trade. We had an 8 pip stop loss and a 14 pip move. I actually think I was looking for highs, these highs right here, as my TP. All right, and so those are the trades from Monday and Tuesday. I'm actually gonna do Wednesday and Thursday in another video, and I'm learning a lot from this back testing. Today is Sunday, so I'm ready for the week ahead. I've already started marking up GBP Aussie dollar chart for the week ahead. Thanks again for joining me along this journey. See you tomorrow.